Hello, Mike Mellinger here. I want to talk to you about an important issue in your divorce, and that's marital and non-marital assets. First of all, always talk to your lawyer when you're thinking that an asset is non-marital or if it's marital. Your lawyer definitely should be your number one resource for advising you. I'm just going to give you some general knowledge as working in divorce court for the last 25 years. I understand the marital assets and the non-marital assets. So first of all, marital assets are assets that are created during the marriage. And assets created during the marriage are assets, generally everything that is created for income, from the income of the marriage. Let me point this out to you from my understanding of the law. Most long-term marriages where you and your spouse started out broke, every asset is a marital asset because it was created during the marriage from earnings of the marriage, and the earnings of the marriage are considered marital. So even if you make $2 million a year now and your spouse stays at home, that income generated by you is considered marital and it creates marital assets. So a non-marital asset is an asset that is not included in the marital estate. There generally are three things that create a non-marital asset. First is owned before the marriage. We see a lot of this in second marriages or later, what I call later age marriages. Someone's getting married later in life. The second reason is it's inherited. So if your parents left you or someone left you something and you inherit it, that's considered non-marital. Another thing closely related to inheritance, let's say your family gifted you assets or stock in a business. The gifted stock would be considered non-marital. So generally, why are we hired? Well, a lot of cases we've been hired to prove by the accounting method that an asset is non-marital. A lot of times we're hired because people really don't do a good job of tracking their non-marital assets. A perfect example is a 401k plan. Let's say you got married later in life and you worked with the company for 10 to 15 years and you participate in their 401k plan. Now you get married, you still work with that company and you start participating in the 401k plan. So the assets in that 401k plan would be considered non-marital at the date of marriage. And then the assets contributed to 401k plan after your date of marriage would be considered marital. One thing a common mistake we see is people will look at the balance at the date they were married and say, hey, there was $100,000 in the 401k plan. And they'll just say, hey, $100,000 of that 401k is non-marital. But the truth is, it's not only the $100,000 that you started with, it's also what we call the passive increases in that account from the date of marriage until the filing date. So what we do is we have a process where we're going to value that 401k and we're going to take the total balance and we're going to allocate this percentage is non-marital and this percentage is marital. Some other common assets that we see is businesses. A lot of times businesses are created before the marriage. And then it gets into an issue where is the business still non-marital because it was either gifted or started before marriage? Or has the business, and this is again, you need to talk to your attorney about this, been transmuted to where it's marital? And there's a lot of ways to look at the business and determine that, or not really determine that, because again, to create a case scenario where the business is either non-marital or marital, the judge will always decide if the business is marital or non-marital. And of course, then it can always be appealed and stuff like that. That's not what we're here to talk about. We're here to talk about marital, non-marital assets and what you should do. So a lot of times if you give us the facts and the statements and different things like that, what we can do is we can give you a fixed price agreement to calculate the marital and non-marital assets. We'll create an affidavit that can be used in settlement. Again, we use the same methodology, and 95% of the time our cases settle.